Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Fear and Greed is working with the team at trading platform moomoo on a series for investors. Every Friday, we're bringing you an episode exploring how to use technology and data for smarter investing. Today, it's all about the United States. The US comprises about half the global share market, so it's no surprise that Australian investors are increasingly interested in opportunities on Wall Street, from the tech giants to some of the household names that have been around for generations. Remember, the information in this episode is general in nature, doesn't take into account your own circumstances. Michael McCarthy is the Chief Commercial Officer and Market Strategist at trading platform moomoo, which is a great supporter of this podcast. Michael, welcome back to Fear and Greed.
Thanks very much, Sean. It's great to be here.
Now, when I left school and went to university and started thinking about investing, I knew about McDonald's, but I couldn't really buy a share in McDonald's, no matter how much I ate of the stuff. Investing in Wall Street stocks is a much easier now than it has been previously, hasn't it?
It certainly has, Sean. And this is one of the key aspects of trading platforms. Online trading has brought democracy to markets. That is, it's allowed all of us to access not just the Australian share market, but share markets around the globe. And now if you drive a Tesla or use Microsoft or Apple products, you can invest in those companies directly and at low cost.
Okay. So where do I start when I'm looking at Wall Street stocks? Microsoft, Tesla, Nvidia, we hear plenty about all those tech stocks. But what's my starting point?
Your starting point is the key reason for going overseas, and that is to reduce overall investment risk. Whether you're diversifying because you're too concentrated in the major sectors represented on the Australian market, or you're just looking for exposures that are not Australian, the ability to buy US shares to complement the Australian shares you might already be holding in your portfolio is a very powerful risk management tool. So that's the starting point, I think, for investors. And as we always make very clear, personal circumstances are a key to the right choices in markets. If you've already got a whole lot of iron ore and mining stocks, buying into a US car manufacturer might make sense because you're buying up and down the supply chain, or it might not because you're too concentrated in those areas. So depending on what an investor already holds, there are a plethora of choices for people in the US market. And locally, we've got almost 3,000 instruments to choose from. That's a pretty good investment universe. But when we go to the US, we're talking about more than 10,000 shares, around 4,000 ETFs and other instruments. And when we add in options, the choices in US investment markets are almost limitless.
Okay, so we talk a lot about the tech stocks. Let's just park those. What are some of the other big sectors in the US that investors can think about, particularly if they want to diversify their portfolio?
Well, a lot of the choices that Australian investors make relate to what's not available here. So more recently, with a lot of global talk about nuclear energy, the ability to invest in that for Australian investors is offered by going to the US markets and investing in those companies that have nuclear power. Now, that's not an investment everybody's seeking, but it's a good example of how we can diversify into industries that are available in the US that are not necessarily available here. We don't have much heavy manufacturing in Australia, and those who want those more reliable income-producing businesses that have steady earnings profiles and are involved in heavy manufacturing, those opportunities to invest come in the US rather than here in Australia. So it's that opportunity to choose what you don't find in Australia that makes looking at US stocks so compelling.
What about research? How should investors be researching some of these companies?
Well, there are plenty of good ways to do that on the moomoo platform, depending on what the investor judges stocks by. If an investor uses charts to judge the best stocks, those tools are available on the website. Not only do we have a very advanced chart pack, we have hundreds of indicators that those who like charts to choose their stocks can use. But those who prefer fundamental analysis, looking at the companies themselves, their balance sheets, their cash flow statements, that data is also available. And if you prefer the shortcuts offered by financial ratios like the price to earnings ratio and dividend yields, you can find those on the moomoo platform too. So it depends what investors are looking for, but whatever it is they're looking for and whatever method they use to choose their stocks, it's available in the tools on the platform.
Stay with me, Michael. We'll be back in a minute. My guest this morning is Michael McCarthy from moomoo. So tell us about riskless. There's a riskless way of trading on moomoo, which I don't believe, to be honest, Michael. How can anything be without risk?
Well, the reason it's without risk, Sean, is because the rewards are all on paper, as are the losses. It's called paper trading. It's a way of testing your theories in the market, of testing the platform, of testing your understanding of how orders work without actually putting money at risk. It's a virtual account, a play money account, and every moomoo investor has one available to them. It's highly recommended that investors going to a new market use the paper trading facility to, first of all, test their understanding of what it is they're doing in the market and test their theories to see if their investment approach is working in the current market conditions. So using paper trading is a key step in becoming accustomed to a newer market. And because of that, we partner with one of the exchanges in the US, the NASDAQ exchange, to offer regular paper trading competitions so that investors can test their skills not only in the market, but against each other.
So very much a try before you buy approach, Michael.
Very much so. Try without risk. Of course, you don't get the rewards either, but try without risk so you fully understand it.
Okay. Once you have tried and you've decided that you do want to invest and you're looking at different stocks to buy, we've talked about this before, but the idea of stock screeners and the use of AIs to create a portfolio that suits you or maybe even mimics some of the greats.
Absolutely. And so on the platform, we do use screeners extensively. And once again, the screeners can be customized to however an investor views the market. But investors don't have to start with any knowledge. We have some pre-made screeners ready to go. Some of them focus on key investment themes like income-producing share portfolios or high growth stocks. And if an investor is new to using a screener, they can try one of these model screeners first to filter stocks to find those that best fit what it is they're looking for in a US stock.
Okay, what about the tax implications and all the bureaucracy involved in it? How does that flow through when you're investing in the US?
Well, I should be very clear. We don't provide tax advice. We're an online trading platform, and investors should seek advice if they have any doubts about the tax status. But essentially, if you're an Australian in Australia, you are trading from your home country, and the tax implications are almost exactly the same as if you were trading right here in Australia.
Okay. So if I'm thinking about going to Wall Street, I've decided I've tried before I buy it. I'm looking at some of these strategies. The fundamental reason why I would go to Wall Street or the UK or European markets, what is it? Is it because you kind of suggested that when you're investing in Australian markets, you're very heavy on banks, heavy on miners. Is it all about diversification?
It's a big part of it. Diversification is a risk management tool available to all of us, whether we're fund manager investing tens of billions of dollars or whether we're kicking off our investment portfolio with our first $1,000. Diversification is a powerful risk management tool. So the reasons for going to international markets sit directly in the risk-reward equation. The idea is to reduce risk by spreading your investments around the globe and across different industries, but also increase your chance of getting exposure to the rewards that come with being in the right stocks. Those magnificent 7 tech stocks that everybody's talking about in the US have accounted for half of the gains in the US over the last 2 years for the whole market. And so if you didn't own one of those 7 stocks, you might still have done well, you might still have good returns, but you might have missed out on some of the spectacular rewards that come from catching global investment waves.
Okay, and so the people that are now shifting into this global investment wave, and it's well beyond institutional investors, it's high net worth individuals, retailers, etc., Michael, I presume?
Oh, absolutely. Some of our newest traders to the market prefer US stocks. They favour particularly the highly liquid stocks, which mean that they can get in and out very quickly. So it's not just people looking at the long term and creating portfolios. There's also opportunities for those who take different approaches to the market. And whether you're a nimble day trader looking to get in and out regularly over the course of the session or buying for the months or years ahead, the opportunities are multiplied when we consider US stocks.
It's exciting. Michael, thank you for talking to Fear and Greed.
Thanks very much.
That was Michael McCarthy from moomoo, a great supporter of this podcast. For more information on the moomoo platform, follow the link in today's show notes for this interview. Remember, Information in this podcast is general in nature. You should get professional advice, including tax advice, and make sure a product is right for you before proceeding. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.